sure we can all agree that COVID-19 and the ensuing economic fallout from the lockdowns has definitely amplified risks in investing in property. And this is a topic that we all need to be aware of. And joining me to discuss that is Paul Mahoney, who is MD of Nova Financial and also a property investor himself. And Paul is joining us from Australia. So welcome to this Zoom call, Paul, and Happy New Year.
Thanks very much, Vanessa. Thanks very much for having me. And yeah, Happy New Year.
Thank you. As I mentioned, I think risks are amplified more than before because of COVID. And you came to us and suggested this Zoom call where we talk about and discuss the top 3 risks facing property investors in 2021. So I think this is a fantastic topic for property tribes. So would you like to start with your number 1? I don't know if there are any kind of particular order, but what's your first one?
Yeah, I think there is an order, especially for this first one, which is probably the biggest risk to the economy as a whole, but then that flows on to property specifically, and that's job loss. We know that COVID-19 and the economic lockdowns and the impact that's had on businesses has already resulted in some job loss. With the furlough scheme ending in March, it's very likely, if not certain, that there's going to be more job loss. Now, it's important to consider, well, how will that affect the economy? But further, we're talking about property here. So how will that affect property specifically? And in my opinion, and I think a lot of people will agree with me, is that it will affect different locations quite differently. And what I mean by that is a lot of smaller cities and towns in the UK are predominantly driven by one industry, or even one company in a lot of cases, where the biggest chunk of their workforce is allocated to, one sort of one company or industry supplying that. Now, that's quite a big risk in my view, because in an unstable economy, and especially when you consider things like Brexit and maybe impacts on that industry or that company from Brexit as well as COVID-19, if that industry or company scales down or moves away, then that can have a really big impact on the demand for property in that location. And that's too big of a risk for me personally, and certainly something we talk to our clients about a lot. We like to invest in locations with strong diversification of industries and therefore of employment provided by a broad range of different companies. And by doing that, it means that if one industry or one company fails or moves away, then others fill the gaps. And we've still got demand both for tenants and in the resale market for our properties. So I think that's a pretty big risk. And there's probably not an awful lot that you can do when you're holding properties in those locations already. But I certainly wouldn't be buying properties in small cities and towns that are driven by predominantly 1 or 2 companies or industries in the current market.
Well, I totally agree with you on that score, Paul. And we've obviously seen towns like Crawley being decimated by the fact that the aviation industry has gone into free fall. So landlords that had all their properties, all their eggs in one basket, are really going to be struggling. Also, we've learnt today that Sunderland landlords can breathe a sigh of relief because Nissan have announced that they are going to retain their plant in Sunderland. So there's good news on that front, but I think you're absolutely right to think about spreading risk across multiple cities and towns, but also multiple industries as well.
Yep.
Okay, so moving on, what's your second, major risk to watch out for in property in 2021?
Okay, yeah. So I think the second risk is more of a perception risk, and that is looking at the UK property market as one market that moves as one or moves as a whole, because it most certainly does not. In fact, there are many, many micro markets within the macro market of the UK property market. You can't invest in a UK property market index. Most of us invest in individual properties in individual locations that are predominantly driven by individual driving factors. Now, this is a risk, but it's also an opportunity. in that some areas will struggle in bad times and maybe even do worse than the average. But some areas will do really well, even in bad times, driven by positive driving factors in those locations. And I think that the risk here is that too many people pay too much attention to the media, and perhaps read in the paper that UK property prices are dropping or may drop over the next 12 months, and either don't do anything or make the wrong decisions based upon that. Whereas if you're looking at the individual driving factors of strong locations, doing your research based upon tried and tested methodology or fundamentals, those things hold true even through bad times, because we don't just invest for good times or bad times, we invest for the mid to long term. So don't perceive the market as one, because it's not one. Look for the best locations and the best properties within those locations, and you can still be confident in doing quite well.
Well, again, Paul, I think you're right on point there, because we can look back to the 2008 recession and individual markets fared very, very differently. And there were some areas that, they went down. There were some areas that just stayed very, very neutral. And then there were areas where prices actually went up. So I totally agree with you on that. And I think the other thing is, if you watch all the media headlines, I came across this fantastic new term recently called doom scrolling. It's just all doom and gloom. And if you let that kind of infiltrate your brain, it's really going to shut down your entrepreneurial kind of mindset, and also stop you from just, being in your own lane and ploughing your own furrow and finding your own opportunities, because they are most certainly out there.
And when you think about it, your mainstream media is almost always wrong, because it's so hype-based. It's all very short-term. If, for example, a good example I often talk about is if you looked at mainstream media, if you asked for the general popular opinion in 2007, just before the last crash, whether it was a good time to invest, you would have got a resounding yes. Property prices are never going to stop. It's going through the roof and then through the universe. It's never going to stop. Whereas, of course, if we look talking timing, that was the worst time to invest. But then you move on 2 or 3 years when everyone's depressed and the economy is not in a great shape. Property prices have fallen a little bit. Is that a good time to invest? The answer would have been no. But actually, it was the best time to invest. If you're trying to time things, which we don't really recommend, but still, if you're looking at sort of the opinion of the media, I think you're almost always worth just ignoring that. Especially when we're talking property, because it moves slowly. It's a mid to long term investment. It's not about today or tomorrow. It's about the next 5 to 10 years. And the media doesn't talk about the next 5 to 10 years. They're talking about this week.
Well, yes, and that kind of segues nicely into your third and final risk, which I guess in a way, we could call it opportunity risk, or not taking advantage of opportunity risk. So give us an explanation of that.
Yeah, so I think something you've quoted me on before, Vanessa, is a quote that I'm sure I stole off someone at some point, but I use it often, is that property investment is not about time in the market, but time in the market. And something I'm getting asked a lot at the moment is, what if property prices fall by 5%, let's say, over the next 12 months? Wouldn't I be better to just wait 12 months and buy 5% cheaper? And the answer is, but what if they don't? What if they actually increase by 5% over the next 12 months? And again, going back to point 2, is we're not looking at the property market as one. We're looking at individual properties, individual locations. And if we found a really good location as really strong driving factors, I would say it's more likely to increase than decrease. So given that there is that unknown, it could go down, it could go up. And therefore, you're only really gambling on that. You could be better off, you could be worse off. And the fact that property isn't about that 5%, it's about, hopefully the property prices double over the next 10 years, and that's 100%. So a lot more than your 5. now is really the best time to invest.
Well, it's the only time that any of us actually have, because we can't go back into the past and buy property, and we can't, hail a Doctor Who time machine and go forward into the future and buy property. So now is the only chance we have, and also with our circumstances today. And again, opportunity risk. In the past, I've known people that have hesitated to invest in property when they were in a very strong position, and then some life event came along and meant that they were no longer able to invest, and they missed that chance, it kind of in the now, because that's all any of us have got.
Yeah, and that's one of the benefits of property. Another thing I often talk about is, when you invest money in property, you're almost saving yourself from yourself, because that money's locked away in the property. When it's sitting in your bank, people, I think it's human nature. We have a proclivity to try to spend it on something. That might be stupid holidays or a sports car or whatever. When it's locked in property, when I buy a property, I kind of look at that money as forever money, because I'm not going to sell it anytime soon. It's locked away. And even if it doesn't grow in value, you're likely getting a net yield from it anyway. So you're making something on it, likely more than what you're making in the bank.
Absolutely.
And that's the thing. And another thing to consider is, even if you significantly underperform the market, or if the market doesn't perform very well over the coming years, especially if you've used leverage, for example, the UK average for capital growth of the past 20 years is 5.5%. If you get half of that and you've got a 75% mortgage, that's 10% on your cash, plus any yield you're generating, which is pretty good in itself. And that's half the average. So, it's not about really sort of setting the world on fire with regards to returns, so far as how well you can do on the money you've invested. It's really more about the mid to long term.
Well, again, I agree 100%. Paul, you're a prolific investor yourself. You actually practice what you preach. Your personal strategy in 2021, are you going to kind of consolidate your position? Are you going to continue to grow your portfolio? What are you doing?
Yeah, I'm still investing. Obviously different things work for different people. Something that I've been doing for a number of years. I've got property businesses, I've got e-commerce businesses, I have health and fitness stores, and what I've been doing for a number of years is putting the profits from those businesses into property. So again, going back to my point before, whether those properties perform well this year or next year doesn't really matter to me. But the fact that I'm taking money I have, putting it into tangible assets that are very likely to grow in value over the mid to long term and generate me a net income, means that I couldn't care less whether they perform well this year or next year. So yes, I'm definitely still building my portfolio. I'm in the process of buying a property in Liverpool at the moment. I've just bought a property in Australia, settling next week. So yes, I'm a big believer in property, because if you're doing it with the right solid fundamentals, I just don't think you can go too far wrong.
Yes, I think, if you're having wobbly moments in property, one of the best things you can do is just sit down quietly with a cup of tea and then go back and think about all the fundamentals. And we have the most fantastic archive thread on Property Tribes that lists all the fundamentals of investing in property, and I will put the link to that underneath this thread. And Paul, we'll also reference your 2 one-bed flats in Cambridge, which you've started documenting on video, and it's very, very interesting. I love seeing those kind of projects documented with actually, detail about the financing and all the numbers associated with the project. I think they're really useful learning tools.
Yeah, well, that's a perfect example of what's achievable in a short period of time from the other side of the world. I did all that from Australia, and all through the whole COVID-19 situation. So please check that out.
Yeah. And it's also just shows the power of working in the digital format as well, that you could be in Australia. I think, how many hours ahead are you? Is it 12 hours?
We're 11 hours ahead at the moment.
11 hours ahead, and you've still been able to manage a refurb of 2 flats. And that's because you've been able to do it all via digital platforms and communications. So it's a great testament to working in the digital format as well.
Absolutely.
Okay, well, Paul, we're going to see you again because you're going to take part in a mini series that we've got on the cards, and that is talking about the use of bridging finance. But for now, thank you very much for joining me from Australia. I know it's very late at night, as we can see out of your window, but lovely to catch up with you, and thank you for sharing your top 3 property risks of 2021, and we hope everybody watching this will join in the discussion and share what you think your risks are as well. If you are watching this on Property Tribe's YouTube, please do subscribe, like the video, and also hit the notifications bell. And I do invite you to go over to Nova Financial's YouTube channel and do the same, because Paul, you're looking to build up your YouTube channel as well, aren't you?
Absolutely. Yep. I'm going to be doing a weekly video, essentially with what's topical at that point in time, as well as all the other video stuff that we're doing with yourselves and others. So yes, there's lots of good content on there.
Awesome. Well, as always, you're a fantastic contributor. Thank you for your support of Property Tribes, and we'll catch you again soon.
Thanks very much.